So the cost of a product comprises of direct material cost. So we have direct material cost. So let's say if the direct material cost is so and so, we put XSSS. Then we can have direct labor cost. We have direct labor cost. We also put what SSS. Then we have what overheads. Overheads. Right. So we also put SSS. By now, you should have your exercise book in front of you, where if there are any powerful issue, you can also, you can also, just make a small sort of a writing in there. So whatever answer we will get now becomes the total cost. Now becomes the total cost. So if I put, let's say SSS here, that means the addition of the material cost, the addition of the labor cost, addition of the overhead is what we have done to arrive at this SSS. So there could be an instance where direct material cost is 5. You have direct labor cost is 10. Then we have overheads to be 3. In effect, the total cost, the full cost of the product becomes 18. Becomes what? 18. Now, in determining the valuation of material cost, talk about this line. Watch that carefully. In estimating material costs, how do you calculate direct material cost? Direct material cost, this is what I want people to be very clear and be mindful about issues pertaining to that. So direct material cost is calculated as the cost per kg, times the number of kgs. The number of what? Kgs. The number of what? Kilograms. So if you want to calculate the direct material cost in performance management, when we say that Paul calculate material cost, how do you calculate material cost? It is not on the day of exam you'll be thinking about how to calculate material cost. You should know it before you go and sit down. So material cost is calculated as the number of kilograms of that material times the rate or the cost per kilogram. I've seen some beautiful questions where they will give you the number of the materials in grams. Meanwhile, the cost is in kilogram. What do? In that perspective, we expect you to convert the number of materials in the grams to kilogram so that you can multiply with the cost in kilogram. It is going to be insane to multiply number of materials in grams by cost per kilogram. That's going to be insane. But we can multiply cost per kilogram by the number of materials in kilogram. Kilogram. That's sort of not kilogram, gram. It is actually going to be insane to do that. So to calculate the direct material cost, which is the first item I've highlighted there, it is the cost per kilogram times the number of kgs or kilogram of the material. Further, when we want to look at other topics like target costing, that is when you realize that we are going to add some element of waste, that the element of waste will also increase the cost of material. So we adjust these two parameters and add another parameter to it. But at this point in time, we have not gotten to a bit of target costing. So if you want to calculate direct material cost, as at this point in time, you need two main things. The cost per kilogram, the number of kilogram of material. Two things to multiply to get the direct material cost. And you realize that we exhibited the same technique when we were solving the gadget code question. Because the gadget code question, they didn't give us the direct material cost, but they gave us the number of kgs of the material and the rate per kg. It was just a matter of multiplying those two elements to get the direct material cost of those products. So please be mindful. If you are in a recorded section, on online class, avoid distractions out there. Some students tend to think that they actually being smart. They are doing something else. This is the time you need to be very, very particular. You need to be very particular. Where I'm based, my internet is very strong. I would advise you the next meeting, please, we all are going to put on our video. I would want to see you, whatever you are doing over there. It could be that somebody is sleeping. Then the person is in fact taking the lesson not serious. We don't want that. So direct material cost, move on to the next bit, direct labor cost. To calculate direct labor cost, I'm referring to this. The first element, which is this direct material cost, I've showed you how to calculate it. The next bit is direct labor cost. I'm going to show you how to calculate direct. Then we come to the overheads. I'll explain the overhead, then we look at the today's topic. So I've showed you how to calculate direct material cost. I know you have written that in your exercise book. The next bit is direct labor cost. Some people are in online class, they don't have any book in front of them. I'm seeing a lot of things. So direct labor cost, how do you calculate direct labor cost? So it is the hours worked by labor times the rate per hour. So if you want to calculate the labor cost, you need to estimate the number of hours that person has worked. You multiply by the rate per hour. If they give you the number of minutes worked by an employee, meanwhile the rate is in hours, you cannot multiply them. Why? Because the hours worked by the labor is in minutes and the rate is per hour. It's insane to multiply. So you can either convert the minutes, the number of minutes worked to hours, and now multiply by the rate per hour. Rate per hour, hours. You cannot multiply rate per hour by minutes. Insane to do that. So we move on to the next bit, overhead. Now in overhead, we actually estimate or calculate overhead using either absorption costing or activity-based costing. Do not worry, I will do the size so that at least you become funny. So with overhead, we either use absorption costing, which we have learned that, absorption costing, or activity-based costing, or activity-based costing. Absorption costing, absorption costing or activity-based costing. Absorption costing or activity-based costing. So that is what we have gone through so far. That's what we have gone through so far. Showed you how do you determine the valuation of overhead cost using absorption costing. Michael, how do you determine the valuation of overhead cost using activity-based costing? Let me check if Sinam is with me here. The participants, Sinam just came in. Please, we are meeting. You need to come on board quickly. I don't know what is happening to Michael. Michael exited. Please, we want you to be here, right? So overhead, we use absorption cost or activity-based costing to determine that, right? So that is it. We have worked ourselves to absorption cost and activity-based costing. If you just join the section, you need to know that the first topic which has been covered, you have to cover that up through recorded section. And the only thing I will just assist you is that whilst you use the recorded session, if you have any challenge pertaining to any other thing in there, you have any question, you need to feel free to ask. If just in case I need to provide some 20-30 minutes Zoom section to explain to you, I'm more than ready to assist you with that perspective. But sometimes some students will get a recorded session and instead of them to watch it, in fact, they don't respect it. It's sometimes really abnormal, right? Yeah. Students are out there, some are not even in Ghana, and they join sections in an online mode, and it's the online session they'll be using to write the exams. So I don't know why those students who are in Africa only seeing, let me just say, in current situation, a lot of ACC teaching providers are online based. We don't look at face-to-face. But notwithstanding, I would want to all the time look at the blend, because some topics are okay to be dealt with, right, in the face-to-face section, right? So the first topic, main umbrella of the performance management paper, as I've given you already, is the costing techniques. That is determined. We have some techniques which help us determine the cost of a product. We have the first one to be the overhead valuation techniques. The lives of absorption costing. So we have the lives of absorption costing and activity-based costing. They are not the same. They are two different topics, absorption costing, and they give two different answers. So absorption costing. Then we have the second bit, which is life cycle costing. Life cycle costing. Then we have the third element, which is environmental costing. Environmental costing. Then we have the fourth bit, which is target costing. So these are the costing techniques we'll be looking at so far. We have dealt with the first topic, so no cause for alarm. Absorption costing, activity-based costing, dealt with. The next bit to be looked at, which we are considering today, is life cycle costing. Now, what is my session going to achieve? I'm going to pick questions pertaining to life cycle costing, explain the assumptions and the ideas behind life cycle costing, pick questions, solve with you today. Thereafter, share with you recorded section, which is going to navigate you through the topic life cycle costing from the basis or from the scratch up to the end. And in those recorded sessions I'll share with you, there were still some past papers that we solved pertaining to life cycle costing. I would want you to support whatever we will do today with that. So that at the end of the day, you would just achieve 100% understanding pertaining to life cycle cost. It is not an area your examiner likes to examine, but just that since it's part of your syllabus, it's important we go through that. If you should just look at current situation examining team, these first four costing techniques, I'm talking about absorption costing, activity-based costing, life cycle costing, environmental costing, target costing. The most important ones for examining perspective happens to be activity-based costing and target costing. So I all the time tell students, there's no need for you to rush and be learning life cycle costing if you are not efficient and effective with activity-based costing and target costing, because that is of what? Testability perspective. If you tend to use all your energy for environmental costing, you say, oh, my friend, you have done a good job, but it is not of high importance. Thumbs up for that. But for examining perspective, we are not looking at it. I'm not saying that don't look at, don't go through environmental costing, but it is not an area to expect, more than even 4 marks. The maximum you can get will be 2 marks. Don't be expecting so much from that area, because it is not complicated. Now, the reason why environmental costing is not giving much attention is that it is categorically stated that there will be no calculation coming from environmental costing. It is only theoretically based. Then, in the case of life cycle costing, we say it can be calculation or theory, but the examiners do not actually like it because it is not complicated. But the most complicated bits are activity-based costing. When students hear of ABC, they want to find some hole and put their head. When students hear of target costing, they want to actually get to the bush. Since we know that they are the most complicated areas when it comes to the costing techniques, those topics under costing techniques, that is where we also want to be examining our questions. In fact, where the students do not like, that is where the examiners want to bring questions. That is purely what the evil side of examiners. And that is what makes exams an exams. Because what the time want to take the unprepared student by surprise. So we also know, because the examiners tend to also provide tuition pertaining to the topic, the paper that they are teaching. So they tend to know, they've met a lot of students, having a lot of exposure, knows the areas of complication. And that's what we also want to all the time examine. That is evil side, but it's normal, right? It's normal. Those who are already studying, irrespective of whatever thing, will still get a pass. But we don't want any person who just do any mushroom learning, root learning, baba, chew the things in the head and want to pass the exams. And never, we will not allow you. Right. So let's pick up. So please note that environmental costing is only going to be theoretically examined. No calculation for you. But the rest, there's going to be calculation and theory. Activity-based costing, calculation, discuss. theory. Life cycle costing, though it is not a favorite, but if we want to look at it per the examining perspective, per the syllabus wise, we have calculation theory. Target costing, calculation theory. Like environmental costing is a only theory. Don't, in fact, when you just flip through the paper and there's a calculation coming from environmental costing, you have to just watch, the screen again. It is not what performance management. You are actually doing something else. It is categorically stated and it will never change. So please don't think about it. Oh, what if the next time there's calculation? What do we do? It is never going to happen like that. Some things are just funny, Yeah. So we're looking at issues pertaining to life cycle costing. Life cycle. Whose life is that? So you're going to cost somebody's life. Is that what it means? So these life cycle costing is also a costing technique. But one thing you should know is that all these costing techniques at the end of the day help us to determine the cost of a product. But the way they tend to help us with the valuation of the cost of the product turns out to be different based on the assumptions. Whereas activity-based costing and absorption costing is looking at overhead valuation, we come to life cycle costing. Here we are determining the full cost of a product based on the stages of life of the product. That is the assumption. We are determining the cost of a product based on the stages of life, the cost incurred on the stages of life of the product. That is our assumption of determining this cost. Our cost is determined based on the life of the product, the life cycle of the product. Life cycle costing. When we come to target costing, here we are looking at it from the point of achieving quality, where we do not want the customer to overpay. So what we do is that we first of all look at it from the external point of view. Consider the ideas of the external users and try to come to the in-house, the production side, and produce or mimic what the customers have actually talked about. So in effect, it is like you want to meet and exceed customers' requirements. That is the principle about target costing, and it's mostly applied by Toyota Ghana Limited or Toyota, whatever they want to talk about. We actually collate ideas from the customers to know, oh, the product you use, how was it? Then we tend to embed whatever they tell us into our production. Not only the characteristics of the product is what we embed, we also look at it from the point of what the cost. And that's why we have target costing. Environmental costing, we are looking at how best do we reduce cost as a result of the waste, pollution to the environment. Because we believe that waste increases cost. So that is also the principle of what environmental costing. So we tend to say garbage in, garbage out. We do not want a situation where you input 300 kg of a material into a machine, the machine processes, and at the end of the day, we get about what? 50 kg. 300 kg was the input. We now get an output of 50 kg. That means that 250 kg have actually gone through what? Waste. And we don't want that to also what happen. So we want to look at some parameters to reduce the cost and activities of waste. Environmental costing. So we have numerous costing techniques, but each and every one is having its own story, beliefs as to how they do their things in the case of the valuation of the cost. So that is what we are looking at. So basically, we are looking at life cycle costing. So mostly we tend to say that we have the stages of life of a product, just like a normal human being. At the point where you have been conceived, some kids, when you are actually pregnant, in fact, if we're eating one ball of kinky, you may start to eat 5 balls of kinky. So that child is actually increasing cost right from that point of conception. Thereafter, after you have given birth to that boy or girl, a whole lot of complication comes in. That individual gets to school, nursery, or whatever, crèche, or whatever you want to talk about, primary, lower primary, upper primary, those bed, university, and those things. So you should just say thanks to what parents, they've actually done well. So if you want to use life cycle costing to determine the cost incurred on Daniel, parents can sit down. Those who have been keeping receipts can sit down and now be adding their receipts. Add their receipt and now tell Daniel, they told those things that I got receipt is about 150,000 Ghana cedi. But there were a lot of them I didn't actually get receipts. So Daniel, if you are saying that you are now a champion, pay me and let me also go my way. It becomes something else, right? But it's in normal context does not happen, right? So in determining the life cycle cost of a product, we look at the numerous stages of life of the product. And we look at it while the first stage is what we call the development stage. The development stage. Development stage. You still get all these bits and pieces from the full recorded session I'll share with you. So the development stage. Then we have the introduction stage. Introduction stage. We have the growth stage. We have the growth. We have the growth. We have maturity. Maturity. Then 5, we have decline stage. Some people bring in saturation, but saturation is where what leads to decline, right? So these are the stages of life of the product. So we need to know the characteristics pertaining to every stage. At the development stage of production, you only incur losses. You inject in capital. But that's not necessarily mean that every business at the development stage is only cost that you incur. Some businesses at the development stage, you still make some revenue. And the perfect example is when you want to, establish a school. You do not have any land, you do not have any bid, but you can still make some money. Okay, probably whilst you buy your land, look at building, you can still have online class. And the online class will be a means of generating revenue. So in practice, it is not every product which turns out to incur zero revenue at the development stage. Right, good. So the development stage is, in the normal context, turns out to be injection of what? Cash into that project, right? Try to set the pace, get your raw materials ready, your machines ready, organizing aspect of whatever business you want to do. That's basically what happens in there. The introduction stage, here we have produced the product and we want to introduce it, create that sort of what market position in the minds and heads of what consumers. So we need to launch some advertising campaigns, those sort of buy one, get one free promotions. Any sort of means to attract the customer and also retain the customer is what we need to look at the introduction stage. At this point in time, you still make some money. Here, you still make some money with respect of the type of item. But you still need to increase advertising campaign here because you are now introducing something new or probably something which is already in the market, but you, the company, can be a new entity. Or you can be an existing company, but the product you are bringing is a new product that you need to, just like those who work for insurance companies, you'll be talking throughout, at the end of the day, they tell you they are not interested in that bit. It is not easy at that level, right? Then we come to the growth stage here. Revenue is actually at its peak, booming, everything booming. There has been a market acceptance of a product. There are a lot of referrals coming up. Things are actually in the good state. But we know for sure that nobody will grow and will not die. Whatever be the case, you grow, you die. So, but there are some instances you can do certain things to avoid death. The product gets to the growth stage. You need to rebrand the product. You need to come up with some re-engineering strategies, some benchmarking strategies to keep the product alive. But most importantly, to ensure that the market share of your product is not lost. But if you do not come up with those strategies, then the product will rise from the development stage and it will get to the decline stage. And when it gets to the maturity stage, where there's little or no growth, that is where we tend to test the competency of management. If manager when you get to maturity stage, You will now know, Ko, you are about dying, you know. We want to do something for us to for us not to die. That is where the pressure starts mounting on you, that we expect you to come out with some skills as a manager. If there's nothing you can bring on board, you say, oh, manager, when you are born. Because you're going to just sit down and stare and let the product get to the decline state. If it happens that that product was your cash cow, what are you going to do? So we need to all the time be very alert. Managers, you need to be alert, know the stage of life of your product. Then try to, look at it from every context. Try to look at how best you can still keep the product in market and still give it a superior quality and all benefit premiums that it gives you, what is to stay on top as a competitive company. That sort of, we need to consider all those sort of issues rather than allowing the product to get to the decline stage. It gets to the decline stage, it becomes very difficult to recover. If a product loses its reputation, it turns out to be difficult for that product to regain the reputation. Reputation takes just a few seconds to be lost, but it takes a lot of period to build that reputation. It is not an easy thing, right? So decline stage here, just you have gone back to your roots, just at the development stage where you were making too much losses. Okay, so I'll share with you the recorded session to throw more light on this bit. But we have think ahead, a bit of question that we need to look at. And at this point in time, I will not be the only person to do the talking. So the screen has been displayed. Let me call any of you to do the reading for us. The lives of Daniel. Let's see. Daniel, can you help us with the reading of the question? Now, let me give you a guideline before Daniel reads. Your exam has been categorized into 3 main sections. Let me be very clear on that. Before you get to the revision stage, so you should know this bit as early as possible before we get to a moment. Let me just answer this problem. All right, thank you for the time. So I was talking about your exams format. You know for sure something general or generic is that your exams is not paper and pen writing. It is a computer-based exam. Students tend to ask me, Henry, so how do I fit? I've never gone through CBE computer-based exam before. How do I fit? I tell the student, relax. If you can use Excel and Word, just like what you have on your laptop, then you shouldn't be scared. But the only thing is that you need to practice solving questions so that where those bits that you type, you are not going to look at where is A on the laptop, where is letter D on the laptop. That sort of issue will not happen. Right. So the form of the exam is a CB computer-based exams. You sit behind your computer and you write the exams, and then you click submit, it ends there. But when you're looking at the sections of the exams, we have part A of the exams. Now, this part A tends to have 15 questions. 15 questions. These 15 questions are single-handed questions. They don't have any bearing with any other question. So question 1, you read question 1, short, you answer, it ends there. Question 1 does not lead to question 2. It doesn't have any bearing with question 2. So 15 questions are in part A, multiple choice, A, B, C, D. Over here, students say, now, Putumanto is easy to pass. Write it and let's see. If it is easy to pass, then why is that it's having a lower pass rate? We test understanding. If we're writing an exam, the exam says CB, computer-based, multiple choice, you need to be very careful because it is a paper good to test your understanding. So that gives us 30 marks. That gives 30 marks. So the 50 questions, each is worth 2 marks, it will give you 30 marks. How many percentage are you left? 70%. So we come to part B. Part B, we start giving you mini long case studies. The 15 questions in part A are single, short. But part B, we start giving you mini long case studies. Right? Good. However you want to describe it. So we have the first we have 3 main case studies. So let me just put it here. First case study. Don't be afraid, panic about the hearing of the word case study. I deal with the case study. Please relax. You've seen an example, a typical example on the screen. So that is what I'm referring to. So the first case study will present itself 5 questions, and each is worth what? 2 marks. So the first case study is worth 10 what? Marks. Then we have the second case study. So the second case study, let me just a matter of copying this and paste, right? It makes life very simple and a smart work also. So we have the second case study. The second case study will also give us what? 10 marks. The third case study will also give us 10 marks because you have 5 questions each under it. So in effect, part A gives us 30 marks, part B gives us 30 marks. Then we have lastly part C. Now part C, that is where we are going to have a little bit of a longer case studies. So we have 2 main questions. So the first question is worth 20 marks in total. So that is what? 20 marks. The second question, also longer, is also having 20 marks in total. So at the end of the day, part A gives us 30 marks, part B gives us 30 marks, part C gives us 40 marks, giving 100%. So this is the format of your answer, of your exams. Now, I have displayed some issue of part B. So the part B here, we call it session B. So session B, all 15 questions are compulsory and must be attempted. Now, on the day of exams, even the student who is going to fail the exams will say that part A, Harry, part A was okay. They all the time say that, right? Even the student who are failing, who are going to fail, all the time say part A, it was okay, it was okay. Then they come to part B, they say, that is where the complications started. In fact, that is where some people start failing. When they come to part B, that is where some people give up. In fact, they actually resign from passing when it comes to part B. The boys are separated from the men. The girls are separated from the ladies. Part C, they say it was a disaster. It was a disaster. Now, to pass these exams, you need to be ready to go through part A, B, and C with every confidence. And not confidence by math, but confidence by action. If Paul is still sleeping, then I'll actually be surprised. At this point in time, you are sleeping. Hey, go, let's move on.
I'm not sleeping.
Excellent. If you are not sleeping, then that is okay. We actually see that through questioning, if truly Paul has not been sleeping. The lives of Isinam, is she sleeping? At this point in time, the lives of Michael, is he also sleeping? Whilst exams is just around the corner. Well, we see all those beds when we go through the mock stage and the exams debrief stage. So we have a perfect example of what I want to talk about. Here, it's a mini case study, and we are going to use to answer question 16 to 20. Question 16 to 20 is 5 questions. Question 16 itself, 17 itself, 18, 19, and 20. 5 questions. So you can see that this is a mini case study with 5 questions for 2 marks each, giving you 10 marks in total. So session B, all questions are compulsory. Don't make it compulsory and see if you can pass. Please use the grade provided on page 2 of the candidate answer booklet, no more booklet, but instead an online perspective. Each question is worth 2 marks. The following scenario relates to question 16 to 20. Now let's proceed. Before you read questions like this, you need to read the requirement, the first 2 requirements, before you read the main question. So the first one says, what is the life cycle cost per gigawatt of the nuclear station to the nearest housing? Then the next one says, which of the following will decrease? That one we'll answer it later. First, the question 60 is a calculation. Let's go in there and give it a bash. at this point in time, I would want Daniel to read the question so that at least we can answer it. Daniel.
VoltCo generates and sells electricity. It operates two types of power station, nuclear and wind. The cost and output of the two types of power station are detailed below. Nuclear station. A nuclear station can generate 9,000 gigawatts of electricity in each of its 40 years of useful life.
Excellent.
Operating costs are...
Now, one thing we do is that, Daniel, hold on for me. One thing we do is that whilst you read the question, we need to calculate. In life cycle costing, we look at all costs which comes out through the overall stages of life of the product. So you have started talking about some cost. So we need to look at that calculation. So the first bit you are talking about, you said a nuclear station can generate 9,000 gigawatts. 9,000 gigawatts of electricity in each of its 40 years of useful life. That's what you are talking about. And you are saying that operating costs are $486 million per year. Some element of cost comes in. Operating costs include a provision of depreciation. So here they have given us the estimated useful life. Are you going to use straight line method or you're going to use reducing balance method? Since they've given you the useful life, you use the straight line method. The straight line method is also called the fixed installment method. Sometimes it surprised me to see a student who has graduated with accounting. Then when you talk about reducing balance method of calculating depreciation, you would have free. So we proceed, right? So Daniel, can you walk us through? We move.
Operating costs are $486 million per year. Operating costs include a provision of depreciation of $175 million per year to recover the $7,000 cost of building the power station.
Okay.
Each nuclear station has an estimated decommissioning cost of $12,000 at the end of its life. The decommissioning costs relate to the cost of safely disposing of spent nuclear fuel.
Okay.
Wind station. A wind station can generate 1,750 gigawatts of electricity per year. It has a life cycle cost of $555,000 per gigawatt and an average...
I don't know if it's only happening from my end.
What is the life cycle cost?
PS, your network was messing up. I don't know. Maybe or just for my end.
Can you hear me, please?
Yes, it's fine. Thank you very much for the
should I read over the wind station again?
No, it's okay. It's okay. We don't have much time, so we zoom in and give it a bash, right? So let's just zoom in and keep ourselves okay. Dan, thank you very much for the reading. I appreciate. So we are basically going to, before I do this, let me share with you this item. A moment. Let me share with you this item straight away so that at least you can pick it up and use it. Where is it? Okay. Please, I think by now, all of you have received the notes that we are using for our class. I would want you to print them. Then you print them, you learn it. If you can ask all the students who have passed from my end, they don't joke with my PM notes. It is not paid for. It is part of whatever that you are enjoying. And that I don't see the reason why students will be waiting. I don't know what is actually happening. you need to ensure that you're doing a good job. So please and please again, do your best and let's make a move. So we have an operating cost which comes up for every period, right? So I think I've shared with all of you. I've confirmed that I've shared with all of you, so I don't have any problem with it. I think Afia is having it. Yes, Afia will be the only person. Maybe I will need to maybe share, but I think that the rest of you, I've confirmed you have shared with you, so you don't have anything to talk about. So in estimating the life cycle cost of a product, you just identify all the costs in the question and just add them, multiply, add them, then you are through. But over here, they have brought in some small element of depreciation. So what are they saying? They said operating costs are 486 million per year. So if for every year is 486, and the examiner is saying that we have 40 years, then what do? So the operating cost, because for every year, per year means every year, right? So we say that the operating cost, right, becomes that dollar 486 million times 40 years, because they say per year. So you give me that answer when you multiply. Then the next bit says that operating costs include a provision for depreciation of 165 million per year to recover the $7,000 million cost of building the power station. We do the analysis. Each nuclear station has an estimated decommissioning cost. So this decommissioning cost is a cost of dismantling or removing what? This item, decommissioning. So the commissioning cost, $8,000 million. So the commissioning cost, we said that the commissioning cost is it 12? Each nuclear station has an estimated decommissioning cost of $12,000 million at the end of its what? Life. At the end of its life. So I think that the math should not be a complicated one. I think Daniel, you were given a value. Can you share with us? Let me also calculate. So 486. A moment. Let me see if I can use my phone to also get it done. 486 times 40 years. So I'm getting something like 119. You can also do at your end if it just in case there's an issue, you let me know. 944. Then I add my million to it. Then the next one, the decommissioning cost, they said is 12,000. At the end, this decommissioning cost only comes in at the end of the year, not for every year. They would have said per year, but here not per year. It only comes at the end of the year. And that will also be what? 12,000. 12,000 million. Then they talk about the cost of what? A gigawatt. The cost of a gigawatt, said 9,000 gigawatts of electricity in the 40 years. So we can estimate the gigawatts. So gigawatts, we have 9,000 times 40 years. And that will give us barely 360,000. 360,000. Then we are going to estimate the life cycle cost per unit. But we already have the 12,000 plus 19,440. What is the total answer we are getting? Then the examiner said we should estimate it per what? Gigawatt. So let me just add this gigawatts. The cost, the life cycle cost of the product, we have just two main parameters. I think somebody has put network hitches. I don't know. So when Daniel was reading, I was not hearing from him that sort of. but I think we'll be fine since the section is recorded. So 19,440 plus 12,000 will give us the life cycle cost of the product. They will now divide this by the total number of gigawatts, because the examiner said calculate the life cycle cost per gigawatt. So life cycle cost per gigawatt will be the life cycle cost divided by the total number of gigawatts. So we need to first of all calculate the life cycle cost. Then we divide the life cycle cost by the total number of gigawatts to get it per unit. And here lies the case in estimating the life cycle cost of the product. We are having 19,440, 12,000. So you add the two. Whatever answer you get, you divide by the 360,000 gigawatts. Then you get the life cycle cost per unit. Who is having a question pertaining to question 16? Question 16. So here the life cycle cost per gigawatt becomes 19,144 times 12,000. So that gives me 31,440. So the life cycle cost per gigawatt becomes the total life cycle, which I'm having $31,440. Then I'll divide it by the total number of what? Gigawatts. So 360,000 what? Gigawatts. So in effect, whatever answer I will get, oh, sorry, this is supposed to be million. Whatever answer I will get will be what? The life cycle cost per what? Gigawatt. The life cycle cost per gigawatt. Right. So that is that answer for question number 16. Is any of you having a question about this? If there's none, then I proceed. Any question? Right. If we are silent, we proceed. Question 17 says that which of the following would decrease the total life cycle cost of a nuclear station? Is it about increasing the useful life of the station, or is it about reducing the decommissioning cost? Which of the following would decrease the total life cycle cost of a nuclear station? I heard a lady's voice. I don't know whether it's a fear.
It's not a lady's voice.
Hello?
It's me, Paul.
Paul. Okay, Paul, let's move.
So
which of the following would decrease the total life cycle cost of a nuclear station?
So,
I'm with you. I can hear from you perfectly.
The first question, when you divide the 311,440
million,
31,440
million by 360,000 gigawatts. Each and everyone should do it, and let's see the answer we are getting. The examiner said we should convert it in what? 1,000. Paul, can you give me the answer? 31,440 million divided by 360,000 gigawatts. What answer are you getting? Tell us, so that we convert it in what the nearest thousands, right? What the examiner said to the nearest 1,000. So what answer are you getting from your end?
I'm doing it, sir.
Oh, I thought you already have it too, so that you give it to us so that we move fast. Okay, so it's going to give us 87,333 in that regard, right? So this is what 87, but to the nearest 1,000.
So is that supposed to be the answer to question 16?
Can you come again? So to the nearest 1,000, it is going to be 87 what? 1,000.
To be 87.
So it's going to be 87,000. The answer is C. But I'm saying that question 17, which of the following would decrease the total life cycle cost of a nuclear station? Is it about increasing the useful life of the station, or is it about reducing the decommissioning cost? which of these two, or probably maybe all of them will do that, or all of them cannot. So which of them is an answer? And why? Hello. Let me call the lives of Daniel. Daniel, unmute your speaker and tell us which of these answers will you choose and why? Please feel free and tell us what you think, right? Yes, done. Let's move.
Sir, please, can you scroll down a bit?
Okay.
No. Sorry, I mean up.
Up. We are saying that we are looking at question 17.
Yes, please.
Question 17 say, which of the following will decrease the total life cycle cost of a nucleus? Here, there's no calculation to be done. So increasing the useful life of the station. I, which is 2, reducing the decommissioning cost. Answer: A says 1 only, B says 2 only, C says both 1 and 2, D says neither 1 nor 2.
Okay, I'll go for B. I'll go for B.
You go for what?
For B.
Why are you going for B?
Because the question is focused on decreasing the total life cycle cost of the nuclear station.
And that?
And then the second option is also aimed at reducing the decommissioning cost. So I feel when the decommissioning cost is reduced, the total life cycle cost of the nuclear station is also going to reduce.
Correct, because you can see clearly that per the analysis that we did over here, the decommissioning cost 12,000 is part of the life cycle cost of the product. So if this 12,000 reduces to be, let's say, 1,000, then that 31,440 we got is also going to reduce. So if the operating cost reduces, life cycle cost reduces. If the commission cost reduces, life cycle cost reduces. So if you want to really reduce life cycle cost, then those two things, which became which we combine to get the life cycle cost, when you touch any of them, when you reduce any of them, the life cycle cost overall will reduce. But why is it that I is not a requirement? I says that increasing the useful life of the station. Useful life comes in here when we are talking about depreciation calculation. Now, if you want to calculate depreciation reduces the operating cost. Note that depreciation reduces operating cost. Now, if you are calculating depreciation and the estimated useful life is higher, what happens? If the estimated useful life is higher, then there's going to be less depreciation. So let me put that comment over here. This is accounting, right? So higher estimated useful life, I can use and show you by example. Higher estimated useful life leads to what? Smaller depreciation by straight line. But they're talking about useful life, so it's a straight line, by straight line. Then if there's higher estimated useful life, smaller depreciation, then what happens? There's going to be what? A higher operating cost. Sorry, there's going to be a smaller operating cost. Smaller, because at the end of the day, the depreciation is part of what? The cost. Okay, so let's check it out more. Operating cost here becomes the full cost of the product, right? Good. So what happened over here is that a higher estimated useful life, smaller depreciation, then no, it's supposed to actually affect the cost because you are not getting anything. So higher operating cost. Using this product for long. Then I use figures. If let's say the cost, we know for sure that we calculate it as cost minus residual value or scrap value, right? Scrap value divided by, let's use calculation, right? divided by, divided by the estimated useful life. Estimated useful life. Right? So that is how we calculate it, isn't it? Now let's imagine that the cost is 5,000. Then we have the scrap value to be 1,000. Then we have the number of years to be, let's say, 5. So Paul can take that. You divide it by 5. So 5,000 minus 1,000 is 4,000. 4,000 divided by 5 will give us 800. Let's check that and let's all think, right? Now, what if the 5,000 is still 5,000? The 1,000 is still 1,000. But this time around, we are increasing the life cycle to, let's say, 10. What happens? It's going to be 5,000 times 1,000 will give you, 5,000 minus 1,000 is 4,000. 4,000 divided by 10 is 400. So you can see clearly that as the estimated useful life increases, then the depreciation charge reduces. But if the depreciation charge reduces, here we are talking about operating cost. Operating cost, we have the total sales value plus all costs involved. The mere fact that you have increased the useful life does not necessarily mean that depreciation has increased, and automatically, in terms of cost, you go and charge that cost as part of the cost that consumers should pay. That is what you need to understand. That's why we say operating cost. So in a normal context, as a result of usage, it should lead to higher operating cost. But the management accountant is not estimating things just like the financial accountants. So here you should know for sure that the fact that you have increased the life of the product, the life of the machine that you're using, will have no bearing on the cost, the life cycle cost of the product. Though it is the machine you are using, but the machine that you are using, if that estimated useful life increases or decreases, it doesn't have bearing on the cost of the product. But if you should increase or decrease the life cycle of the product, the total life cycle cost of the product will change. So that's why I was saying that Daniel is correct by only saying that the correct answer is what? B. 2 only. 2 only. 1 is not going to be correct because increasing the useful life will not lead to affecting the total life cycle cost. Life cycle cost. Here we look at the life cycle cost of a product, which is a nuclear hot station. We move on to question number 18, right? Question 18. Excellent. Here it is a question picked from the theory aspect of environmental costing. It said, how would the disposal cost spent nuclear fuel be categorized in environmental management accounting? Over here, I've not introduced you to it, so I'll leave it. Right. Now, we move on to the last issue, right? We move on to the last, is it last but one? 19 says that if Vault Co. set a price to earn an operating margin of 40%, over the life of the wind station, what would be the total lifetime profit per station? Per what station? So you can estimate it for every what station. I think that we estimated the other one. We're close to it, but just that we didn't conclude. So we look at they are saying that the selling price per gigawatt will attract an operating profit of 40%. So far, let's identify what is actually going to come up per that analysis. So vote, they are considering vote, right? So we come here, the vote, which is the wind station. So we say a wind station can generate 1750 gigawatts of electricity per year. It has a life cycle cost of 55,000 per gigawatt and an average operating cost of 40,000. So if the cost is 40,000 and we have operating margin to be 40%, then how do you calculate the selling price? So you say selling price is equal to that 40,000, that 40,000, oh, sorry, supposed to be in dollars. That 40,000 divided by 0.60. Now, when you put this in this context, a lot of students get confused about that. So where from the 0.60? We are saying that operating margin is 40%. That means your cost is 60%, right? So we say that if, watch your margin, right? If, so say the profit is 40%. So if profit is 40%, when you talk about margin, we say selling price is what? We say selling price is 100%. So if the margin is 40%, then I'll say that if selling price, right? If I can even use this bit. Daniel, you want to ask a question? Let me allow you to come clear.
So please, I want to understand exactly what the operating margin is.
When talk about operating margin, it's like gross profit. And it's sales minus all costs, all operating costs.
Okay.
Are you with me?
Yes.
So that is technically what we are looking at. What is the 40,000 divided by 0.6? Hello? Can you come clear, please, Daniel?
40,000 divided by 0.6.
Yes.
It's 66,666.667.
So if the operating margin is 40%, then that means the cost, watch you. So that means the cost is 60%. Why? Because anytime we talk about margin, selling price, watch this. Selling price is equal to 100%. It's a different ballgame when you talk about markup, right? So if they have given me, the operating, was it the operating cost? They give us one figure over there. If they're giving us the operating cost to be 40,000, then I can just use my if more or less divide. If 60% is equal to the 40,000, I'm showing you why we divided the 40,000 by 0.60. It's equal to 40,000. Then the 100%, which was the selling price, will give me what? Right? So I will say that 100 over 60, sorry, 100 over 60 times 40,000. What answer are we getting? Hello, what answer are we getting? The PS, you guys are not helping, to get the figures.
So I go 0.15.
100 over 60 times 40,000. That's what I'm talking about.
66,666.667.
So it should be the same answer, 66,667. So that should give you the selling price. Meanwhile, they said they incurred what was the, I think they gave us an information over there. It has a life cycle cost of 55,000. So as the selling price was 666, they were having a life cycle cost. So this is the benefit. So this, like, the benefit of the product was 666,667. And meanwhile, the life cycle cost, his operating cost is not important because we're looking at life cycle costing. It's equal to 55,000. So the net difference is the lifetime profit per station. So that is for the first station. I think, yeah, for the first station. That's the station. They said if Voltco sets a price to earn an operating margin of 40% over the life of the wind station. So we are looking at this specifically to the wind station. And in estimating the lifetime profit of the station, we need to know the total benefit of the station less the total cost of the station, which is the lifetime cost of the station. So in estimating the total benefit, which was the selling price, they brought something tricky to help us calculate the selling price. They said margin. Anytime you hear margin, selling price is 100%. So if the operating cost, if the operating margin was 40%, then the cost was 60%. So you say then the 60% is equal to the 40,000. Then the 100% will give us what? And that's what gives us 66,667. So since that is the overall benefit and there's a life cycle cost of 55,000, cost minus benefit, you get the profit. So please, that answers what? The question 19. 18, I've indicated clearly that it is environmental costing and I've not introduced you to that. Any question on question 19? They come to the last question, you say bye-bye for the day. Any question pertaining to question 19?
Sure.
Yes, please.
When you subtract the 50,000 from the
55,000.
5,000 from the 66,067, you not get any corresponding answer in there.
You not get any.
There's no answer corresponding to what I'm getting here.
You are not getting any corresponding answer to that.
Yeah.
What happened is that they said for the entire station, but what we have done is for a single line of item under the wind station. So to estimate it overall, you need to multiply by the number of gigawatts times the number of years to get it for the overall, benefit. So what answer did you get? Let us see that, so that you can use it to estimate it. So full benefits for the entire life or the entire years of the wind station is going to be what? I think you get something like, is it 11?
11,667.
667, right?
Yeah.
Times 20 years. For life cycle, we look at everything for the entire years of the product. How many gigawatts? Thousand 750 1750 gigawatts. So that will give you the overall, based on the overall life of the product. And don't forget that we are converting it to the nearest what? Here did it say to the nearest million? To the nearest million. What answer, Paul? 11,667 times 20 years times 1750 gigawatts. What answer are we getting? Yeah.
It will be 408 million.
To be 400 and what? 480 or 408?
408.
408 what million. Excellent. Yes. So the last bit of question says, which of the following are benefits of life cycle costing? For volt cool. For volt cool. Benefit of life cycle costing for volt cool. So let's see the benefit of life cycle costing. Here we are limiting it to volt cool. It said it facilitates the design out of cost at the product development stage. Convincing. It can encourage better control of operating costs over the life cycle. Correct? Sounds good? But next one says it gives a better understanding of the causes of overheads. Never. When we are looking at getting a better understanding of the causes of overhead, then we are looking at activity-based costing. It is not life cycle costing, my friend. You are actually talking about another guy. This is a benefit from activity-based costing. When we look at the cost pools, cost driver. So in fact, you are wrong. The third bit, you are out of coverage area. You look at the last bit, it provides useful data for short-term decision-making. No, life cycle costing is not a short-term decision-making criteria. And that you saying that life cycle costing provide useful data for short-term decision-making you are actually what? Wrong. We look at life cycle costing for even 20 years and 50 years. We come out with this sort of issue. No, we do not consider life cycle costing for taking only short-term decisions. No, because even in the case of Volt, we looked at it for 20 years. And here lies the case, you are talking about short-term decision making. You are not. You may be a benefit to another company who turns out to look at life cycle cost for each product for, let's say, just 1 year or 2 years. But in the case of Voltco, they look at it for 20 years. And your short-term decision making is not applicable to Voltco. That is why the examiner was categorically saying that which of the following are benefits of life cycle costing for Voltco? For Voltco. So the fourth point is a benefit of life cycle costing, but here doesn't apply to Voltco. That's what we should know. That's what you should know. So 1 and 2 is the ideal situation. We say it is what? B. Excellent. I will share with you the recorded session pertaining to life cycle costing, and I'll even add environmental costing. But one exercise all the time I want you guys to do for me is to go through the study hub, read on environmental costing. Because all the time it comes out to be theory based, and you should prepare yourself. If there's any question pertaining to what we have dealt with, please, you can unmute your speaker and come clear. If there's none, we end the session whilst you still be on standby to receiving. I all the time want to do it now. So just pardon me so that at least I can share before the session ends, right? So that I can share with before the session ends. Do not worry, just a few minutes, it will drop, then we are good to go. It's good for me to go through that rather than you waiting for me. Oh, he's going to bring it. No, I don't want that. So let's look at that life cycle. Check it out. See a beautiful Q&A on life cycle. Yeah. So let me share with you. I think, let me take this. Good. So please, I'm sharing with you, I think 3 sections, right? Just go through them and keep yourself satisfied. First one shared. Okay, let me share with here also. Then I come to the next video, life cycle. Just a moment, right? Let me share this life cycle environmental costing with you so that at least you can have a view of it also. Please ensure that you are fine. For the notes that I've shared with you, in fact, so far, all students who have passed confess that they print that note and they read right into it, go through from page 1 to the last page and come back from page 1 to last page. But those students are making me all the time happy. And I want to modify the notes even further. Because if that is what students are saying, that means the sacrifice was worth it. The sacrifice was worth it. And I appreciate effort from students. Okay, so I've shared with you the recorded section. Thank you very much for the time. I would want you to go through one over again, 3 recorded sections. The third one will drop. You go through them for me, make your summary notes out of it. You are supposed to do that this evening because you're going to meet God willing tomorrow, and I'm never going to look at life cycle costing. Before we start the section for tomorrow, if you have any question, you come clear. If there's none, I move on to the next bit of topic. Have a very good evening and bye-bye to you.